Welcome back to the We Are Cosmic channel, where we break down the world of cryptocurrency in a way that's easy to understand. Today we're diving into something extremely exciting in the XRP market, a potential massive short squeeze that could drive significant price movement. This is not a topic I've covered before on this channel, but right now we might be at a historic point for XRP short positions. The market is full of surprises, and understanding this moment could be key to seeing what comes next in crypto. First, let's talk about what a short squeeze is in simple terms. When traders bet against a cryptocurrency by shorting it, they are essentially borrowing the asset to sell it at the current price, hoping to buy it back later at a lower price. If the price goes up instead, these short sellers are forced to buy back the asset quickly to cut losses, which can push the price up even more. In XRP's case, the short positions are unusually high compared to other cryptocurrencies. This setup could create a situation where any positive catalyst triggers a strong rally, making XRP highly reactive in the short term. Now, before we get deeper into the numbers, I want to give a quick shout out to all our viewers. Your support means a lot. Every like, every comment, and every subscriber helps us continue bringing insights like this. These small actions really make a difference in keeping the channel running and bringing you the latest updates in crypto. So thank you for being part of the We Are Cosmic community. Let's get back to XRP. One of the interesting pieces behind the potential short squeeze involves a company called Bitnomial. This is a derivatives exchange that hasn't received much mainstream attention, but is actually backed by Ripple and has Brad Garlinghouse on its board. Bitnomial is unique because it allows futures contracts to settle in the actual underlying crypto, not just cash. This means that if someone holds a contract through expiration, they receive the actual digital asset, not an IOU. This is a huge development because it enables real ownership, on-chain settlement, and new trading strategies that weren't possible in the traditional cash-settled crypto futures market. The significance of this setup is that XRP could potentially become the primary collateral for these derivatives. With regulatory clarity around XRP and Ripple's strategic positioning, the token could play a central role in this emerging financial infrastructure. This is a major reason why institutional demand for XRP could rise sharply, creating natural buying pressure against the large short positions already in the market. Even without any extreme news or price manipulation, the fundamentals of XRP and its role in the Bitnomial ecosystem suggest that it is underappreciated by the broader market. The short positions are stacked heavily against XRP, which is unusual compared to other cryptocurrencies, even those with less real-world utility. This means that many traders may be on the wrong side of the market, and when institutional demand intersects with these shorts, the potential for a squeeze grows dramatically. To sum up this introduction, we are at a point where XRP is being shorted more than any other cryptocurrency, yet the fundamentals, partnerships, and market positioning are extremely strong. The combination of Bitnomial's innovative derivatives platform, Ripple's infrastructure, and institutional interest creates a setup that could lead to significant upward momentum. Over the next parts of this series, we'll break down XRP's market data, liquidity, ETF influence, and historical patterns that suggest a potential explosive move. By the end of this breakdown, you'll understand why XRP could be uniquely positioned for a major rally, why the market might be underestimating it, and how short positions could act as fuel for this move. So stay tuned as we dive deeper into the numbers, the charts, and the broader implications for XRP, the fundamentals that make XRP stand out, and why its partnerships and market positioning could create a unique opportunity. First, it's important to understand that XRP is not just another cryptocurrency. Unlike many altcoins, XRP was designed for speed, scalability, and cost-efficient transactions. It can process thousands of transactions per second with near zero fees, making it highly practical for cross-border payments. Ripple, the company behind XRP, has strategically partnered with major financial institutions and developed infrastructure like RippleNet, which allows banks and enterprises to move money globally in real time. This gives XRP a strong foundation, which is why it consistently ranks among the top digital assets by market capitalization. One of the most important developments recently has been Bitnomial, a derivatives exchange supported by Ripple and with Brad Garlinghouse on its board. Bitnomial operates differently from traditional crypto futures exchanges. In most US-based crypto derivatives markets, futures are cash settled, meaning you never actually receive the underlying asset. Bitnomial changed the game by allowing futures to settle directly in crypto, providing true ownership. This means miners, institutions, ETFs, and treasury funds can hedge, settle, borrow, lend, and margin using actual digital assets instead of just IOUs. Why does this matter for XRP? Because XRP is positioned to become a key collateral asset within this ecosystem. With regulatory clarity improving, XRP can be used as the underlying asset for derivative settlements. In simple terms, this could make XRP a cornerstone for a new type of institutional trading and settlement system. When large institutions use XRP as collateral, it not only increases demand, but also solidifies its role in global financial infrastructure, giving it real-world utility beyond speculation. In addition to Bitnomial, Ripple has been expanding its influence through acquisitions and partnerships, such as G-Treasury, which focuses on treasury management solutions. These integrations show Ripple's broader strategy, combining XRP, derivatives platforms, and treasury infrastructure to create a comprehensive ecosystem for digital assets. This ecosystem allows institutions to move both crypto and traditional assets efficiently, providing transparency, speed, and reliability that legacy systems struggle to match. Now let's consider the market psychology. Currently, XRP is being heavily shorted, meaning many traders are betting that the price will drop. This is unusual because XRP has strong fundamentals, regulatory clarity, and growing institutional adoption. Most traders are either unaware of these developments or are focusing solely on short-term price movements. This creates a classic setup where short positions are extremely vulnerable to rapid price increases. When institutional demand intersects with these positions, it could trigger a short squeeze, forcing shorts to buy back XRP quickly and potentially pushing the price higher. It's also worth noting that while the market is highly volatile, XRP's infrastructure and liquidity provide a strong backbone for price stability in the long term. As more institutions adopt XRP for settlement, it creates consistent buy and sell volume, which reduces the wild swings seen in purely speculative markets. Combined with Bitnomial's crypto-settled derivatives and Ripple's growing ecosystem, XRP is positioned to benefit from both fundamental adoption and potential market dynamics like a short squeeze. Liquidity refers to how easily an asset can be bought or sold without causing significant price changes. For XRP, liquidity is currently concentrated above the market price, which means a lot of XRP is being shorted at higher levels. This is significant because when demand hits these levels, short sellers are forced to cover their positions, often in large volumes. This dynamic can create what traders call a short squeeze, where prices move rapidly upward due to forced buying. The combination of XRP's strong fundamentals and high liquidity stacked against it makes this situation particularly noteworthy. To put this in perspective, compared to other cryptocurrencies, even those with little real-world use, XRP has a disproportionately high short interest. This indicates that a large number of traders are betting against XRP despite its strong utility, partnerships, and infrastructure. Most of these short positions are placed by participants who may not fully understand the underlying fundamentals. In other words, the market is underestimating XRP's potential, setting the stage for an accelerated rally if even a small catalyst occurs. One such catalyst is the influence of exchange-traded funds, ETFs. ETFs are investment vehicles that allow institutions and retail investors to gain exposure to cryptocurrencies without directly owning them. XRP has seen record levels of ETF interest, indicating that institutions are beginning to treat XRP as a serious asset. When ETF demand increases, it can create sudden buying pressure, which, when combined with large short positions, can accelerate price moves. Essentially, ETFs act as a bridge between traditional finance and the crypto market, allowing more capital to flow into XRP and increasing its systemic importance. Another key factor is the interaction between short positions and market sentiment. Currently, the market shows signs of capitulation, meaning many traders are exiting their positions due to fear. Historically, extreme capitulation is a strong indicator of a market bottom. In XRP's case, capitulation combined with strong ETF demand and institutional adoption creates the perfect environment for a potential explosive rally. Traders on the wrong side of these dynamics could be forced to buy back XRP quickly, intensifying upward momentum. It's also worth noting the role of Ripple's strategic acquisitions in supporting this ecosystem. With companies like G-Treasury, Ripple is not only enhancing XRP's utility, but also expanding the types of assets that can flow through its network. These integrations increase the credibility and adoption of XRP as a settlement layer for both crypto and traditional assets, further supporting liquidity and reducing long-term volatility. When we put all these factors together, liquidity concentrated above the price, high short interest, ETF demand, and Ripple's infrastructure, we see a scenario where XRP is uniquely positioned for a short-term rally and long-term adoption. While market sentiment may be pessimistic at the moment, the combination of fundamentals and technical setups suggests a strong probability for upward momentum. XRP's liquidity, short positions, and ETF influence are interlinked forces that could trigger significant price action. The market's misunderstanding of these factors is actually creating a setup where positive developments could have an outsized effect on XRP's value. Looking back over the years, XRP has shown several periods of explosive price action. One of the most notable examples was the 2016 to 2017 rally, where XRP experienced rapid gains after long periods of consolidation. During this time, XRP's price movement followed a clear pattern: periods of sideways trading, followed by sudden and significant upward momentum. What's interesting today is that XRP's current price chart mirrors many aspects of that historical setup. We see similar consolidation phases, steady accumulation, and the alignment of key indicators that suggest the market is preparing for a potential breakout. Another key point is the monthly timeframes. When looking at XRP over several months, the pattern shows that each consolidation phase is followed by stronger rallies, often fueled by a combination of fundamental news and technical triggers. Right now, XRP is in a position where fundamentals and market sentiment are converging, creating a setup similar to what we saw in previous rallies. Historical charts indicate that when these conditions align, the likelihood of a strong, fast-moving rally increases significantly. The short positions we discussed earlier also interact with these technical patterns. Historically, high short interest combined with consolidation phases has often preceded sharp upward moves. This is because as the price begins to rise, traders who bet against the asset are forced to cover their positions, adding extra buying pressure to an already bullish technical setup. In XRP's case, the short interest is unusually high, meaning the potential for a short squeeze is significant. This combination of technical buildup and forced buying could amplify any upward move, making the rally both swift and substantial. Chart analysis also highlights key support and resistance levels. Currently, XRP's price is holding above strong support zones that have been tested multiple times over recent months. This indicates that buyers are defending these levels, creating a floor that prevents the price from dropping further. At the same time, resistance levels above the current price are significant, meaning that once broken, they could trigger rapid gains as traders scramble to enter the market. Historically, breaking such resistance levels has often led to explosive rallies in XRP, and the current technical structure suggests that the market is approaching one of these pivotal moments. Another factor to consider is volume patterns. Trading volume is a critical indicator of market participation. In XRP, we are seeing steady accumulation with occasional spikes in volume during positive news or market developments. These volume patterns often precede major moves because they indicate growing interest and liquidity. When combined with short covering pressure and institutional participation, these volume trends suggest that XRP could be poised for a strong upward move in the near future. Finally, the current setup is reinforced by broader market conditions. Cryptocurrency markets have historically experienced cycles of fear and greed, with capitulation phases often preceding major rallies. XRP's current position shows record levels of capitulation, meaning many traders have exited their positions in fear. Historically, such extremes in sentiment have often signaled a market bottom, setting the stage for the next wave of buying. When we combine this with XRP's technical alignment, short interest, and institutional adoption, the probability of a significant rally increases further. XRP's historical patterns, technical chart structure, volume trends, and high short interest all point to a scenario where the market could experience an explosive upward move. The alignment of these factors mirrors previous successful rallies, making XRP's current position particularly compelling. In the next part, we'll focus on institutional involvement, ETFs, and the potential long-term impact on XRP's market dynamics. One of the most significant developments in the crypto market is the increasing involvement of institutional investors. Companies like BlackRock, Vanguard, and Franklin Templeton, which historically avoided cryptocurrencies, are now actively exploring ways to enter the market. Institutional demand brings large-scale capital inflows, which can stabilize prices and provide long-term growth potential. For XRP, which already has strong fundamentals and regulatory clarity, this means that demand could increase significantly in the near future. creating a scenario where short positions are squeezed as institutions buy into the asset. Another important factor is the role of ETFs, exchange-traded funds. ETFs allow investors to gain exposure to cryptocurrencies without directly holding them, which is especially attractive for institutions that need compliance and risk management. XRP has seen growing attention in this area, with ETFs being developed that include XRP as part of their baskets. The significance of ETFs is twofold. First, they increase liquidity, making it easier for large investors to enter and exit positions without affecting the market too much. Second, they signal legitimacy, as ETFs are heavily regulated and vetted by financial authorities. This legitimization makes XRP a more attractive option for both retail and institutional investors. Now, let's connect this to XRP's current market setup. We've already discussed the high short interest, meaning a large number of traders are betting against XRP. When institutional money flows in, whether through ETFs or direct purchases, it creates buying pressure at a time when many traders are on the wrong side of the trade. This combination can trigger a short squeeze, which is a rapid upward price movement caused by shorts being forced to cover their positions. Essentially, institutions could unknowingly act as catalysts for an explosive rally, adding fuel to the upside. It's also important to consider market dynamics in terms of liquidity and adoption. Ripple's strategic partnerships and acquisitions, like G Treasury and Bitnomial, are building infrastructure that supports real-world use of XRP. This is not just about speculation. It's about creating a financial ecosystem where XRP can be used for settlement, collateral, and digital asset management. As more institutions adopt this system, the liquidity of XRP increases, making it easier for large trades to occur without causing excessive volatility. At the same time, this adoption creates a price floor, as XRP becomes a key asset in institutional operations, reducing the likelihood of deep price drops. Another dynamic to note is the interaction between retail and institutional investors. Many retail traders are unaware of the institutional developments and often focus on short-term price movements. This creates a gap in market understanding, where retail shorts and speculative trades may be heavily positioned against XRP, while institutions quietly accumulate. This divergence can amplify price moves when these two forces interact, leading to rapid gains and potentially historic rallies. Finally, institutional involvement and ETF demand have a long-term impact on market perception. As more regulated financial players enter the market, XRP's reputation and legitimacy grow, attracting even more capital. Over time, this could shift XRP from being seen primarily as a speculative asset to being recognized as a systemically important financial tool in the crypto ecosystem. This transformation supports not only price stability, but also broader adoption and utility, reinforcing the bullish fundamentals we've been discussing throughout this series. XRP was built to facilitate fast, low-cost transactions, especially for cross-border payments. Ripple has developed a robust infrastructure, including RippleNet and strategic partnerships with banks and institutions, to make XRP usable in real-world financial systems. Companies like Bitnomial are creating derivatives markets where XRP could act as collateral, and acquisitions like G Treasury expand Ripple's reach into treasury and financial services. All of these developments make XRP more than a speculative asset. It is becoming an integral part of financial infrastructure. From a technical standpoint, XRP's charts show patterns similar to historical rallies, particularly the 2016 to 2017 period. Consolidation phases, accumulation, and volume trends suggest that XRP is building momentum for a potential breakout. The high short interest, combined with institutional buying pressure, creates the perfect setup for a short squeeze, which could accelerate price movement significantly if triggered. Historical chart analysis shows that when fundamentals and technicals align like this, explosive rallies are more likely than not. Liquidity also plays a key role. With short positions stacked above the current price and institutional interest rising, XRP has a unique environment where a sudden surge in buying could trigger rapid price gains. ETFs in particular provide both liquidity and legitimacy, making it easier for large capital inflows to occur. Record levels of capitulation, where many traders have exited the market in fear, further indicate that the market may be at a potential bottom, creating fertile ground for a bullish phase. Looking at the broader market dynamics, the combination of retail sentiment, institutional accumulation, and strategic adoption of XRP creates a multi-layered support system. Retail traders may be positioned on the wrong side of the market, while institutions quietly accumulate XRP for strategic purposes. This divergence often amplifies upward moves when the two forces interact. Additionally, XRP's real-world use cases and integration into financial infrastructure reduce long-term volatility and create a price floor that protects the asset from extreme downside risk. In terms of potential outcomes, if the short positions begin to cover while ETFs and institutional adoption increase, XRP could see a rapid, substantial upward movement. This scenario mirrors previous short squeezes in other markets where undervalued assets with strong fundamentals experience explosive rallies. Over the longer term, as Ripple continues to expand its ecosystem, XRP could solidify its position as a major digital asset used for settlement, collateral, and institutional financial operations. The long-term outlook is equally compelling. With regulatory clarity improving, broader adoption across countries, and Ripple strategically expanding infrastructure, XRP is positioned to grow both in price and in global relevance. While volatility will continue and short-term fluctuations are inevitable, the convergence of fundamentals, technical setups, institutional involvement, and market sentiment provides a strong foundation for sustained growth. In conclusion, XRP is at a pivotal moment. Strong fundamentals, increasing institutional involvement, ETF influence, high short interest, and historical chart alignment all point to the potential for significant price movements. More importantly, Ripple's ecosystem and strategic partnerships create a framework where XRP can serve as a critical financial infrastructure asset in the long term. For anyone observing the crypto market, understanding XRP's unique setup today provides valuable insight into where this asset could be headed in the next few months and years.